Good evening, students. Welcome to day 2 of chapter 1, business automation of business processes. So we want to start. A lot of you have said good evening to me. Good evening to all of you. Okay, so Abdul Qadir, I got your name. It's not appearing properly. Okay, so let us start today's session. So the process we are going to have today is that we'll complete this topic, risk and its management. Then we will take the MCQ for day 1. We'll solve the MCQ, then start for day 2. Before we start for day 2, we will have a recap of day 1 and then start for day 2. This we are carry forward topic from day 1. So let us start. So we talked about risk, introduction, terms, sources, and now types of risk. So let us take them one by one. Business, technological, and data related risk. Let us define them one by one. Now, business risk, as simple as it could be, any aspect, any uncertainty, any event that could risk business in any form or manner, that will be business risk. That includes strategic risk, financial risk, regulatory compliance risk, operational risk. Now, please understand, all these risk itself, A, B, C, D itself are topic of discussion. It includes reputation within strategic risk. It includes reputation, leadership, brand, and changing customer need. These are risks that business faces. Now, when you look at strategic risk, how you imagine strategic risk? Risk which are going to affect the top management, or risk which are going to affect the business performance, or risk which may affect the business continuity, or you may say going concern. So those category of risk will be classified as strategic risk. Then financial risk, which are going to have impact on the financial performance of the entity. In fact, the geopolitics that we are in today, one of the key issues that has come about is the exchange rate, the crude rate. So these are all having a lot of impact on the performance of entity. The raw material prices are going up. Metal prices went up. The crude prices, the power prices in Europe, if you go, the gas prices have gone phenomenally very high. So these become part of financial risk, which include volatility in foreign currency. That is the present situation. Interest rate. Suppose I ask this question to all of you. The interest rates regime, the geopolitics as it stands today, how you see the interest rate? Means you have to see, we are in increasing trend of interest rate, or decreasing or constant. So increasing, decreasing, or constant. So you have 3 words, IDC. You have to choose your. So the interest rate related risk, commodity, I've already shared, metal prices are going up. Credit risk, credit default, like during COVID, because many businesses couldn't survive. So it led to credit default. Then liquidity and market risk. Liquidity relates to the availability of funds in the market. The CRR word that you must all be familiar with, cash reserve ratio. So it's a ratio that is designated by Reserve Bank of India, that a specific percentage of banks' time and demand liabilities banks have to maintain in form of cash with other bank, RBI, or bullion, gold bullion. So if Reserve Bank wants the cash availability market to be high, so it reduces the cash reserve ratio, so that enhances liquidities because banks can lend more money. Then market risk, the present situation we are all in, is a very good example of market risk. So I think most of you have answered correctly. Increase. Avlok has said constant. No, Avlok, it's basically increasing rate that is there. Okay. Then, so that is financial risk. Then regulatory compliance risk, SA 250, compliance with other laws and regulation. It becomes an important standard that you all must remember whenever this issue of regulatory and compliance risk comes. Risk that could expose the organization to fines, penalties from regulatory agency due to non-compliance with laws and regulations. In fact, if I just multiply only for the sake of understanding, I am bringing it. Regulatory non-compliance can also become the if impact is so material. Okay, let me put this question to you. Let us see how you understand things. So, for definition part, it is clear what you are reading is good. But I want you to say that if regulatory compliance risk is so material that it may affect the business continuity, then of ABCD option, the regulatory compliance risk converts into which? Okay, if I put my question correctly, regulatory compliance risk is written that organizations may have to pay fines, but suppose it becomes very, very high, very material to the level that it may affect going concern status of the entity. So from ABCD, regulatory risk will convert into which risk? Just try to answer that. Okay. For understanding purpose, for allowing us to analyze things. See, we are chartered accountants. Analysis is one thing we must always do. Okay. Then operational risk that could prevent organization from operating in most effective, efficient manner or be disruptive to other operations. So operational risk, say suppose there is a strike or uh, availability of materials is affected, then there could be operational risk. So most, yes, very good. So many of you have said strategic risk. That is a correct answer. So Jyoti has said correctly. Uh, it can, so the way I defined it, it may affect the business continuity. So the core that we were looking at was basically strategic. So I think this e-chocolate has to go to uh, Jyoti. Then Varsha has put a lot of entries, but no submission. So strategic risk Vedika is also correct. So e-chocolate goes share. Okay. Yeah, Priyanka. So the question was basically that regulatory compliance risk that you are looking is correct. So if the question comes in examination, types of business risk, what you're looking at is correct answer. What I wanted you to analyze that, see, regulatory compliance risk sometimes can be of such intensity, such materiality that it may affect the business continuity of the entity. In that frame, it converts into what? So that good. So now you got it. Okay. So first we talked about business risk. Then within businesses, two additions, hazard risk and residual risk, risks that are insurable, such as against natural disasters, where you can get insurance. Okay, so it could be basically environment related issues against which you can take insurance. Those becomes a risk of hazard. And residual that you cannot bring to zero. We did talk about that yesterday when we started the topic, that can risk by content, intent, definition be reduced to zero. So the correct answer is you cannot make risk zero. What you can do is reduce it to a level that's impact of the risk on the business is not material. That is, so that part becomes residual risk. That is risk that exists even after you have implemented a lot of control. So that is part of business risk. Then technological risk, very important. Now today, one of the easiest technological risk could be, suppose the lecture we are taking, what technological risk to this class has, इस क्लास को टेक्नोलॉजी की कौन सी रिस्क है, ऐसा Abdul, no. Inherent risk is residual. No, absolutely not. It's a very wrong interpretation. I'll try to answer that. Okay, so my question to all of you was, to the way we are taking this class, what technology risk exists for this class? Okay, let us read. The dependence on technology in business process automation for most of the key business processes has led to various challenges as technology is taking new forms and transforming as well. The business processes and standards adopted by enterprise should consider these new set of IT risks and challenges. It includes downtime due to technology failure, frequent changes or obsolescence of technology, multiplicity and complexity of system, different types of controls for different type of technology and systems, proper alignment with business objectives, legal, regulatory requirement, and dependence on vendors due to outsourcing of IT service. So what you're basically looking at, that what technology failures can lead to what technology failures can create risk to business. So you have said it correctly. Internet failure, power cutoff, network failure, network issue, server problem, device failure. Very good. Wi-Fi connectivity, great. Internet connectivity, network. So then other technology risk, vendor related concentration. Yes, this is very, very important. Where vendor okay, just give me a second. We'll just restarting some network issues being suggested. Just we never imagined we could have a practical example like this. So yeah. So vendor related consent, we were on basically the issue. I asked you a question that what technological risk could exist to. So many of you said networks failure. So I had not planned a practical example for that, but that was a network issue. Okay. Then we were here, vendor related concentration issue. Lot of work being given to a single technology vendor. So suppose your vendor goes bankrupt. So you are going to take a big hit. Then segregation of duties not being there, external threats leading to cyber frauds and crimes, higher impact due to intentional, unintentional act of internal employee. Again, this is those of you who have read audit, those who have read internal controls, that is discussed there also. New social engineering technique. Now, please understand this word social engineering is a defined fraud in internet. Social engineering is basically uh, emotionally blackmailing a known person for sharing, asking that person to share something that is critical for technology. Like you get this SMS, never share your OTP, never share your password. But then within friends, sometimes you feel that friend is asking, I can share password. So that is social engineering. Need for governance processes to adequately manage technology and information security. Need to ensure continuity of business processes in event of major exigencies. So these are technology related issues that may come. Then data related risk. Now, please understand each of this is important. Each of this is a defined fraud. So we are just reading them. Data diddling, bomb. Bomb is logic bomb. Christmas I'll define round down, salami, trapdoor, spoofing. Okay, so let us take definitions one by one. Data diddling. Data diddling means trying to modify data during, before, or after processing. So where the processing is going on, you try to modify data at any of these three intermediate steps, that is data diddling. Then bomb, you may say logic bomb also. Now, what exactly is this? So it's a time triggered, event triggered, or situation triggered malified software or a malware or a virus. So a specific virus that hits you on a defined date or a defined time, or sometimes when you take a defined action, that is called as a logic bomb. Just for example, there's a virus that may reside on your system, and it, suppose it wakes up, then the virus asks you, please type your date of birth. As soon as you type your date of birth, the virus says, happy birthday to you, and your system crashes. So typing your date of birth was an event, triggering event for that virus. So those becomes logic bomb. Then Christmas cards, this a virus that is associated with this cards, visiting this cards that you give on festivals, congratulatory cards. So those are Christmas cards. Worm. Worm are specific type of malware which hit your system by, they multiply and hit your system. Worms are also sometimes called as self-propagating. Self-propagating means these, if they come to your system, they automatically send themselves to other system without having a need for any communication medium. Then rounded down and salami. This I'll prefer to share with a live example. Rounded down and salami. Let us bring. So I'm Excel sheet to tell you how these work. Yes. So we are talking of two type of threads, rounded down and salami. What exactly are these? So let us take with a simple example, 10, 3. So I'm calculating 10 divided by 3. It comes to 3.3. Okay, the next 10, 6. So let us see. It comes to 1.67. Now, there are command called as round. So let us use this command and round it to, yeah, so it is 3. Same you use for this. So it becomes 2. Now, if you see, 3 is 3.3. So 3.3 has been rounded to 3. 1.6 has been rounded to 2. So 1.6 is taken to the nearest highest integer. So if the distance is like that, now there is a command called as, then I'll discuss and then I'll tell you where this command is actually used. So round down is a command in Excel, this. So it's rounds down it to 3. Let us apply the same command to 1 now. You see the difference. If it is normal rounding, 1.67 is 2. But if I do round it down, it is 1. Now, how this fraud is done? So this fraud is done in a manner that the fraudster take example of bank. Say take example of State Bank of India. State Bank of India has crores of customers who have saving bank account with State Bank of India. Now, interest is credited to those saving bank account holder. Suppose a fraudster enters into the bank system and creates a fraud of round down. So what the fraud will be? That the interest credited to the account holder is say 1.67 and actual calculated interest is 1.67. But because the fraudster has entered into the system of State Bank of India, the credit given to the holder of the account is what? 1 only. 0.67 balance interest credit, the fraudster is able to credit to a different bank account and withdraw the money. That is called as rounded down fraud. If I have been able to explain that, that is called as a round down fraud. Then there's another fraud that is there, that is called as salami. Now, what exactly that fraud is, we'll take this example to understand. So the difference will also be clear to you. Salami. Salami basically means to cut. Now, so how it works? So what is done in this? Let us use this command left. So I said 3 digits from left. Let me say 4 digits. See what happens. Here, the amount is 1.66. So the amount beyond the second decimal is not credited here. So in this case also, what the fraudster can do, he creates a salami fraud, says that cut off. Salami means to cut. The basic idea about this salami is to cut. So value beyond a defined location is cut. Whatever remains. So what will remain in this case? Let us see. This is the total interest. This is the salami cut. This is the balance interest. So in this case also, there is some balance figure which is left. So that is again taken credited to a different account and the fraudster can withdraw. Now, if you see the nature of loss for salami and round down is same, but the logic of doing them is very different. So that is why there are two different names given to you. Okay, so let us go back to our slide. So that is round down and salami. Then trapdoors are these are specific risk which are created in system so that if there is an unauthorized entry, so that can be trapped into those. So those are called as trapdoors. And spoofing is a network level fraud where the person enters into system by spoofing his or her ID, telling the wrong ID. That is spoofing. Then a special category of data risk has been discussed, that is asynchronous attack. So asynchronous attack, they occur in many environments where data can be moved. So asynchronous is basically means there's a time difference between the transmission of data from sender to receiver. Please understand, this is going to make this clear. Asynchronous is that the speed of transmission and speed of receiving is different. For example, the sender is sending, say, 10 bits per second, but the recipient can only receive 5 bits per second. So there is a queue for 5 bits because the recipient is not able to receive. So where there is a mismatch, that communication is asynchronous, and due to this mismatch, fraudster are able to attack those locations. So that attack is called as asynchronous attack. This includes data leakage, subversive attack, trying data leakage means that data is lost. Subversive means trying violate integrity to affect integrity data. Wiretapping is listening to others' communication. Trying to listen to others' communication is wiretapping. And piggybacking. Now, piggybacking is when this data is being sent from sender to receiver. So when they enter the system, they have some like entry path. So piggybacking is where the valid data is entering. A person who is a hacker attaches himself or herself to valid data and enters into system. Piggyback, to attach with someone and enter into system. That is called as piggybacking. Then there's a query on salami. So see, please understand salami is a basic understanding of salami is to cut. So when I said that to cut, so what the hacker does, hacker writes a logic in system where the hacker says cut all digits after second decimal. To cut, salami means, you can remember literal meaning, to cut. So he cuts, the hacker creates a logic in system to cut. So the example we took was the total interest credited to the saving bank account was 1.6667. Hacker wrote a logic, cut all values after second decimal. So values till 1.66 were left in the account, and after 0.66 were taken away. So 0.00667 was taken away. To cut after a defined location. That is salami. So basic idea of salami is to cut ahead. Yeah. Then risk management strategies. So we have talked about introduction, terms, sources, types, and risk management strategies. Wiretapping is listening to others' communication. Okay, let me try to give a better example to wiretapping. So, sometimes it happens. I don't know whether you have faced that, but I have faced that if you tune on FM, so sometimes okay, let me give a very more practical example. This cordless phones in home, if you have used them, those who have used cordless phones, say some 10-15 years back, so they were very heavy cordless phone that you could attach to your landline, and those can be used. So I know that there was a risk that cordless phone could be tuned on FM frequency, some specific FM frequency. So what is happening? The say neighbor is listening on that cordless phone, and because you can tune into that frequency, you are listening to that communication. So capability of listening to others' communication by entering the communication channel is wiretapping. You have to say, yes, it is clear now. So wiretapping is what? Listening to others' communication by tapping into the communication channel. That is wiretapping. Okay. Then risk management strategies. Someone has talked about Pegasus issue of phone tapping. Yes, it has become a worldwide issue. So a lot of governments and courts are looking after exactly what the software is, what the purpose is, and why it was used. So it's there. Subversive attack. Okay, so subversive attacks are attacks which are launched to harm. Those attacks are called as subversive. The intent is to harm you. Those attacks are called as subversive attack. With an intent to harm, subversive. Yeah. Yeah, should be correct. Okay. Now, risk management strategy. So you have defined the risk. Now we want to manage those risks. So risk management strategies. Effective risk management strategies begin with a clear understanding of the entity's risk appetite. Now, risk appetite means what? How much risk you can bear. That is appetite. Your what you can say you can bear with. That is not going to affect the business continuity to that extent. So, risk management links to risk appetite and identifying high level risk exposure. So, when you say high level risk exposure, please understand those risks which may affect the business continuity, they will be generally classified as high level risk exposure. After defining risk appetite and identified risk exposure, strategies for managing risk can be set, responsibilities clarified, defined based on the type of risk, project, its significance to business. Board and senior management may choose to take up any of the following risk management strategy in isolation or combination as required. So now what we are going to read is risk management strategies. This is important. Lot of questions are framed on this in exam. Tolerate. We'll read the headers and then we'll define. Tolerate, accept the risk, terminate, eliminate the risk, transfer, share the risk, treat, mitigate the risk. Okay. Some risk which may be considered minor due to their impact or the probability of occurrence is low. In this case, consciously accepting the risk as a cost of doing business is appropriate, as well as periodically reviewing the risk to ensure its impact remain low. Very important. Last line is very important. So we talked about that risk can never be kept at zero. We talked about residual risk. We talked about that which risk will be residual risk. So basically that risk which we feel will not have a material impact on business. It can exist and still we can survive. That we allow, that we call as tolerable risk. So that is one part. The last line is very important. Let me read that again. When you allow a risk to remain as a tolerable acceptance of a risk, you must every time review the risk level. It must always remain low. Very, very important. If that risk which you considered 3 months back was a tolerable risk and you are making a reassessment and you find that the impact may go up, then you have to take action on that. So very, very important. So tolerate means those risks which are minor, the impact will be not much. That you call as that for those risks you have the risk management strategy of tolerating. Sometimes it happens. So like in office, there are team members, there are staff members, there are articles. So many times, see, for all article, it's a learning process. So uh, article during that article, he or she may commit some error. Now, the boss, the trainee, the trainer, the chartered accountant, the member in charge training the article, he or she has to take a call. The what error was there and what is the impact analysis. So if it is minuscule, then the member tells the staff member, team member, or the article that this is an error, but the impact is minimum. So that you accept. That is. Then terminate, eliminate the error. Very, very important. It is possible for a risk to be associated with a specific technology, supplier, or vendor. You read a news report, just for example, that some products supplied by the vendor are not of good quality, poor quality, or the product may be subject to virus risk. There are multiple network products that you listen, modem, multiplexer, hubs, switches. So they may be, so you read a news report that says this company's products have been hacked, have been generally hacked. So then if you're using that company's products, devices, you go by this, eliminate that risk. That means you replace those devices with other devices. That is, it is possible for risk to be associated with a specific technology, supplier, or vendor, then you need to eliminate or change that vendor. Transfer, share the risk. The best example of transferring, sharing the risk is insurance. When you take insurance, so what you have done, The risk that you were carrying, you have transferred to whom? The insurance company. Say, for example, fire insurance policy of your office, building, car, vehicle, home. That is. So when you take a fire insurance policy, the risk of fire is there. If fire occurs, then you have transferred the risk to whom? The insurance company. So that is transferring or sharing the risk. Then treat, mitigate the risk. I think we had a good discussion on mitigating the risk. We talked about vulnerability, threat, risk. So when we talked about vulnerability and weakness, we said that we put in place controls to reduce the impact of vulnerability or weakness. That is mitigating the risk. That is for today. Before we go to the questions, so we'll take the questions first and then take the next PPT. So I'm bringing the questions of day one. Then I'll request you to put your answer in the chat. We'll allow everyone to respond to it. Let me bring the MCQ. Okay. So I'm bringing the first question. You answer in the chat. By the time I'll just review the queries if you had put. No, Karthik, you when you share risk, you basically are transferring the risk. Okay. Now, so then I'm waiting for answers to this question A, B, C, D. Let me just run through if any other query by the time you ask. Okay, got it. Let us see the correct answer. A, fantastic. So most of you have said correctly. So I think that discussion we did very well and you answered it correctly also. Good. Second question. So when you now answer second question, do write question 2 answer so that there is no confusion. Many of you are saying D. Okay. Let us see the correct answer. Yeah, it's a business risk. Country risk is something all countries have been affected by it. And country risk you want to relate to the country of origin, but that is not an issue. Okay. C is the correct answer. Most of you have said correctly. Now, passwords. So, define password because then you answer it. Okay. So that the most of you answer correctly. Password is basically to ensure the right person has the right access. सही व्यक्ति को सही जानकारी मिले यह अधिकार देने के लिए पासवर्ड का प्रयोग करते हैं. Password is a control to ensure the right person gets the right access. Now you answer. So all probably may be correct. The most obvious one, the best one, like that. Great. 100% correct answer. That is good. One, I consider it as a typo. Someone said A. No, B. Confidentiality. Good. This is easy. Question 4th. Let me read the other answers if anyone has answered any other incorrectly. So there was only one incorrect answer in 3. Yeah. Jaspreet, question 3 is confidentiality. Now question 4. Jaspreet has answered different. Okay. Let us see. Yeah, transferring. We took this example. So yes, I think 100% is correct. Yes, 100% is correct. Okay. Thank you, Just got it clear. Okay. Then this is a good question. Take your time. Which, if assessed poorly, is going to have the maximum loss? Vulnerability is weakness. Threat is exploitation of weakness by an agent. Risk is uh, uh, possibility of an agent exploiting vulnerability causing loss. That is risk. Impact is value of loss. Okay. So the correct answer is A, vulnerability. So if assessment of vulnerability is poor, you know what will happen? No controls, no mitigation. So it's a huge disaster. Yeah. Okay. A lot of you have answered differently, but I think I'll discuss that. See, please understand. Suppose you don't do a vulnerability assessment. What it means? That or your vulnerability assessment is not good. I'll give you practical. It's a very good question. So when I say mobile, so I am doing a vulnerability assessment. So what vulnerable? So I calculate that my mobile can be subject to virus. So what I have done, I have installed antivirus. That is there. But I never calculate that my mobile could be or my mobile's data location could be corrupted by anything, not necessarily virus. Now, what has happened? Because I did not calculate that my mobile's data can get corrupted even otherwise than by virus, because I have already have an antivirus. You know what I have not done? I have not taken proper backup of my mobile data. And what happens? The day my mobile's data gets corrupted, I am run here and there to find the backup because I did not take it. So what I did not do properly was I did not identify that weakness that my mobile data can also be corrupted. So that is very, very important. Okay. So we'll shift, go to the second part of the chapter. Okay. So we are here in chapter 1, part 1. We talked about introduction, enterprise business processes, risk management, and now enterprise risk management. So now today we'll be talking about ERM controls. Let us do it one by one. Okay. Today I am at a third place, so not the general place of the lecture, but okay. Now, so there's a question I need to answer. Vulnerability is weakness of control. Say the example that we started day before yesterday was that suppose this location where I am taking my lecture, the right side is wall, the left side is a door. Now, if the door is open, that will be referred to as a vulnerability. In technical terms, we call it as a weakness. That is vulnerability, weakness. Okay. Now, when I say what is threat? So I say threat is an agent that exploit vulnerability. So in the example I have shared, what is the vulnerability? The door is open. What is threat? An agent. So an individual, she can enter from the open door is threat. Please understand that is threat. What the person does is part of risk or impact. But because the door is open, there is a vulnerability and someone can enter, that is threat. That is the relationship between vulnerability and threat. Viruses are there. Okay. If I don't have controls, that is weakness. If I don't have firewalls, that is weakness. What is a threat? Virus can enter because the firewall is not there. So that is relationship between threat and vulnerability. Okay. Ankit asked about notes. I think I have answered that, but not just for the sake of it. What I have told you, the whole presentation is from the module. The discussion is targeted from the module. What things I want you to note, I have already told. These all examples that I'll share at appropriate locations. Please keep a note of these examples. The best part is that when you go to your examination, when you review this whole chapter, whole topic, whole subject, then when those examples are available in front of you, your remembrance will become very fast. Understanding is going to improve. And generally, what will happen, today, suppose this 15 days class we complete, or 15 days, this whole subject is over. Next time you are going to study this subject just at the start of examination. And then, so even when you start the subject at such a fag end or near your examination, if the examples are available with you, then your remembrance will be very, very good. Understanding will be good. That is the point. Okay, Uday has got a question. Good. Uday has put a very good question. Uday, no need to put it more than once. I got it. So allow me to read. Sir, how to learn all risk? Good, good. So there are experts who do this. So experts are going to do risk assessment. Then, okay. So even at cost of repetition, this discussion is good. So I'm allowing it to happen again. So vulnerability is weakness. The same example. The laptop is there. The left door is open. That is vulnerability. Okay. Someone can enter. That is threat. The person who enters, he or she can take away the laptop. The possibility that the laptop can be taken away is risk. And if the laptop is taken away, the value of risk is impact. That is how you read. So vulnerability, weakness, threat agent exploiting that weakness. Threat agent may cause loss. That is risk. Value of loss is impact. You have to say yes if that is clear. Uday. Okay. Then next, very important topic, that is enterprise risk management. Broadly, you may call this as ERM also. Okay. So introduction, benefits of ERM, and what exactly is ERM framework. Uday, that what you have written about vulnerability is incorrect. Okay, so don't remember it that way. Okay, so Prabhat wants one more example. I'm there to do it. These are very important words. So vulnerability I've shared is weakness. Okay, let us take more example. Say in your office, like most of the chartered accountants office, you know, we don't do a vulnerability assessment regarding this natural disaster, environmental disaster, fires. I have got an understanding that not more than 50% of chartered accountants across India have a fire insurance policy. It's a gap. This is weakness, that you have not assessed a risk. That is, you have not calculated that loss could occur to you. That is. So that becomes a vulnerability. What is threat? That fire is not going, no, fire is not going to walk in the corridor and come, but fire can come from short circuit, and like that becomes a threat. Risk is you may lose data, you may lose computer, you may lose file. Impact unimaginable. That is how you look at it. So Kanak Harini has a query how to make notes. So please understand, the best ways to present in your words. I'm explaining as simple as one can get to, so that the remembrance is good. And please remember that whatever you write, logically it has to be correct. That is the core that we must carry. Okay. Now, management introduction. So in implementing controls, it is important to adopt a holistic and comprehensive approach. So this line is very important. Holistic and comprehensive means covering each aspect, every parameter within the every entity, every function within the entity. So you don't imagine a department individually, you imagine the whole enterprise holistically, in totality. That is the core. Hence, ideally, it should consider the overall objective, process, technology, and risk appetite. Based on this, overall risk management strategy has to be adopted, which should be designed and promoted by top management and implemented at all levels of enterprise in an integrated manner. So, when you talk of risk per se, you have to imagine risk for the organization. Assessment has to be at an organization level. To what question someone put, that how you do it. So there are experts who are going to do it for you. Regulations require enterprise to adopt risk management strategy, which is appropriate for the enterprise. So regulations, law, like for example, fire example I've talked about. So Factories Act 1948 requires all factories to have fire extinguishers placed at strategic locations. The safety standards as per the act requires that there has to be annual fire training, security training regarding fire given to all employees. So this is part of the regulatory structure, that this must be put in place. So as from the business perspective, I must do it, and I may have to do it from a regulatory perspective also. That is the point. Then ERM may be defined as a process affected by entities, BOD, management, and other personals, applied in strategy setting across the enterprise, designed to identify potential events that may affect the entity, manage risk to within its risk appetite, to provide reasonable assurance regarding achievement of entity's objective. So what exactly is ARM? Is the process that is put in place by the board of directors to ensure that all risk that is there is within the managed framework, falls within the risk appetite of the entity. So two aspects, the assessment of it and monitoring, managing of it. That is risk management. Important, we already know that no entity can operate in a risk-free enterprise. And ERM also does not create it. Again, that same word is that we did that exercise before, that no one can bring it to zero. But risk management enables the entity to operate effectively in an environment that is filled with risk. ERM provides enhanced capability to do the following. In fact, just a way of example to help us understand. See, like earthquake. Japan is one of the countries where there are hundreds and thousands of earthquake every year. That is the intensity. So every Japanese citizen, what I know, 3 years and above, he or she is trained how to respond to tremors. So you know what they have in Japan? Every house has a hanging lamp from the roof, and even a 3-year-old child is trained that if you find this lamp tumbling or rotating or moving like a pendulum or some movement in the lamp, then do not talk to anyone. Every locality of Japan has something called as a rendezvous location where they can all assemble in case of earthquake. So now, because every individual has been trained, every individual has been educated, the response to risk is very good. That is the benefit. So this you take to enterprise, that when you have good assessment, good strategies, then the response is going to be good. So you are going to respond to risk with awareness. It is not going to come as a surprise to you because you will be ready to respond to that. That is the core objective of ERM. First, align the risk appetite and strategy. Risk appetite is degree of risk on a broad-based level that an enterprise, any type of enterprise, is willing to accept in pursuit of its goal. So what level of risk I can accept? That is the management considers entities' risk appetite first in evaluating the strategic alternatives available, then in setting objectives, aligning with selected strategy and developing mechanisms to manage the related risks. So based on, so you start doing this with risk appetite and strategy. How much you can bear, that is. Then link growth, risk and returns. Entities accept risk as a part of value creation, preservation. They expect return commensurate with the risk. ERM provides an enhanced ability to identify, assess risk, and establish acceptable level of risk relative to growth and return objectives. So what you have done, like you must have read that what is profit? So profit is reward for risk taken. So what you are basically doing here, you are linking the risk to return parameter, creating a profitability multiplier within that. So entities accept risk as a part of value creation, preservation, and to expect return commensurate with the risk. That is how you do it. ERM provides an enhanced ability to identify and assess risk and establish acceptable level of risk relative to growth and return objectives. Enhance risk response decision, very important. Because you know the risk, then you can create a better response. ERM provides a rigor, effort to identify and select among alternative risk response, avoidance, reduction, sharing, or acceptance. So what is best for you? We have talked about risk strategies. So the risk response decision are those: terminate, eliminate, transfer, share, accept. So if it is very minor, you accept. But it is hazardous, eliminate. If it is insurable, transfer. It is mitigable, establish control. That is the action you can take based on that. Then this I've already talked about. Minimize operational surprises and losses. Because you have done a very ethical risk assessment, you use the right person to do risk assessment for you. So when the risk comes to you, you are not surprised. You knew, you had calculated. That is how, like example of backup. So every entity needs to take backup. What has to be the frequency of the backup based on the nature of the business? So if normal CA firm, they take backup every 7 days or daily or bi-weekly or monthly based on the volume and the nature of the business. If you take backup, believe me, you are saved a lot of trouble. The last is very, very, very important. All entities are subject to some sort of data loss. If you have backup, which has been timely and correctly taken, the loss is reduced. So it minimizes surprises and minimizes loss also. That is how you read it. Identify, manage cross enterprise risk. Very, very, very important. Please understand this line is phenomenally important. Huge discussion can be done. Cross enterprise risk means a risk here is affecting something there. The interlinking. We talked about integrated system. We talked about purchase order and then going back and going back. From purchase invoice, we went to purchase order, then to comparative, then to quotation, then to indent. So how the whole process is interlinked, that comes to knowledge. And every entity faces myriad of risk affecting different parts of enterprise. Number of risks. Management needs to not only manage individual risk, but also interrelated risk. Very, very, very important. In fact, just take it further. Suppose you have to say yes, no. Based on your answer, I'll discuss it. Suppose I am an entity, I buy 100% of my raw material from single vendor. I am buying 100% of raw material from a single vendor. I have only one supplier. You have to say whether it is a business risk, yes or no. Let me repeat. I am an entity. I am buying 100% of my products from single vendor. I have a single supplier. You have to say yes, no. Is it a business risk? Say yes, no. Based on your answer, we'll come back to this. This is a phenomenal line to talk about, learn. So those who are talking about this, what to note, how to note. So the submissions are there. Keep them and add these examples, which I'll be sharing with you. Okay. Provide integrated response to multiple risks. Yes. Business process carry many inherent risks, and enterprise risk management enables integrated solution for managing. Integrated means all compassing. It takes care of all aspects. So if interrelated risk is there, integrated response can be there. Seize opportunities. Management considers potential events rather than just risk. And by considering a full range of events, management gains an understanding of how certain events represent opportunities. So it creates a very good understanding of how business is operating. And rationalize capital, because you already made an assessment of the possible risk and the possible response. The capital usage is put to a better utilization. More robust information on entities. Total risk allows management to more effectively assess overall capital needs and improve capital allocation. Very important. Okay, so let us go to the answers you have given. Just give me. So 100% is yes, great. So you are learning well. You see, the way you respond gives a lot of motivation to me. So you have said, someone did say an extra line. That was by Dhyanesh. The supplier is monopolistic. Good. In fact, I'll improve the line Dhyanesh has said. Yes, Priyanka says it's a business risk. Great. Has put S. So that is yes. Good. Now, let us go to that because I wanted some discussion to be done. I'll just take a sip of water. Now, why I brought that question was to bring to focus that, see, generally what is happening when I am talking about risk, our focus is generally internal. We are not evaluating risk in terms of the external factors. So when I say ERM, it covers Holistic, the first line was what? All encompassing, every aspect. So in that every aspect, this external relationship is also covered. So if I have a single vendor, single supplier, it's a huge risk to my business. That is how you look at. So it's a phenomenal topic to learn about ERM. Yes, so Anand Ubhaykar, if disrupted, its supplies are disrupted, it will affect production stoppages. Prabhat adds, yes, because single supplier may not supply all the time. Yes. And then the single supplier has key to your business. He says, increase price. What is happening? Ukraine, Russia, Europe was so much reliant on Russian gas that Russia till, I don't know what is this percentage of Russian gas that Europe is still using, but they just couldn't do it. They had to buy that gas. So that is a huge risk. So ERM, on the concept, I think this example makes it very clear that ERM is all encompassing. It just not covers the internal aspect, but it takes care of the external relationship and the risk associated in that relationship also. That was the point I wanted to make when I talked about that vendor issue. So that must get. This topic is phenomenal. It has a lot and lot of parameters to learn and discuss. Okay, then enterprise risk framework. ERM provides a framework for risk management, which typically involves identifying events and circumstances relevant to the organization's objectives, risk and opportunities, assessing them in terms of likelihood, magnitude of impact, determining a response strategy, and monitoring progress. So that is one by one that you do, how you are going to look at it. So what ERM is basically providing all these parameters. ERM is risk-based approach. This is again, it just carry risk-based. So it basically focuses on identifying risk, which includes the method and process used by organization to manage risk. ERM provides framework for risk management, which involves identify threats or risk, determine how big a threat or risk is, implementing controls to mitigate the same, to reduce the impact of that. That is what it is going to focus on. ERM consists of 8 interrelated components that are derived from the way management runs business and are integrated with management process. These components detailed in next slide. Very important slide. These 8. So what I'll be doing, running first read the headers and then we'll do the discussion. Okay. So internal environment, objective setting, event identification, risk assessment, risk response, control activities, information communication, monitoring. Let us read them in detail. So internal environment. Internal environment encompasses the tone of the organization and sets the basis for how risk is viewed and addressed by an entity's people, including risk philosophy, risk appetite, integrity, ethical values, and the environment in which they operate. Management sets the philosophy regarding risk and establishes a risk appetite. Please understand this para number 1 is directly relating to your audit. Those of you who have read audit risk, there are 3 components: inherent risk, control risk, detection risk. Those who have not read, they are going to read. Now, what I basically want to bring, I want you to answer this question. What exactly is inherent risk? So inherent risk is part of the organization, part of the business function. Say, for example, I want you to understand and then I'll ask a question. Doing transaction by check or online or RTGS, NEFT. So one way is doing it in a check mode, online mode, RTGS, NEFT. That is one way of doing a transaction. Another way of transaction is cash transaction. So transaction in cash and transaction through a banking channel. Let us say a banking channel transaction or a cash channel transaction. You have to say which transaction has a higher risk, or you can say which transaction has a Inbuilt inherent higher risk. Cash transaction. So based on the nature, based on the operation, a transaction has a higher inherent risk. Exactly that is what para 1 is about. That when you talk about a ERM framework, you make an assessment of what is entity's own philosophy about controls, about risk, how entity views all these aspects. If entity is positive, positive in terms of must have controls, must implement controls, must have internal audit, must have proper assessment, must have proper processes defined, that means the internal environment is good. Now the question is, if internal environment is good, what is the impact it will have on inherent risk? If internal environment, working culture is good, what is the impact it is going to have on inherent risk? The question is whether inherent risk will be high or low. When internal environment is positive, management is positive, they want to have controls, they want to have audit, they want to have functions defined, they want to have standard operating procedures, they want to define the way of working, they want to do every good thing. If it is so, what is the impact on inherent risk, whether it will be high or low? Answer the question, then we'll have a good discussion on your answer. So first is internal environment, whether it is positive or not. Second, so what ERM allows you to define this, that objective setting. Objectives should be set before management can identify events potentially affecting their achievement. So very good. So you need to predefine. Good. Event identification. Potential events that might have impact on entity should be identified. Event identification includes identifying factors, internal and external, that influence how potential events may affect strategy, implementation, and achievement of objectives. This example of vendor was a perfect example of external linking to the process. Other external event can be Ukraine-Russia war, impact of that on my business. If my business deals, in fact, that war has had impact on all business because power prices, energy prices, crude prices have increased across the world. So it was basically an uncontrollable event, but it was external and affecting every business. In fact, a lot of businesses in Europe have already closed down because their energy bill has gone so high that the profit parity is not there. They are not generating profit. So close down. So event identification. So what ERM is helping you? Identify these things. Doing risk assessment. Identifying risk are analyzed to form a basis for determining how they should be managed. Risks are associated with related objectives that may be affected. Risks are assessed both an inherent and residual basis, and assessment consider the likelihood and impact. So that is there. So when you say risk assessment, every aspect has to be covered. Risk response. We have talked about risk response. Based on the nature of risk, management selects an approach, sets an action to align the assessed risk with entities' risk tolerance and risk appetite. Then you can decide to avoid, accept, reduce, or share the risk. Control activities, policies, procedures are established and executed to ensure that risk responses that management and selected are effectively carried out. Proper implementation. Proper communication, information. Information is needed at all levels of the entity for identifying, assessing, and responding to risk. Effective communication also should occur in a broader sense, flowing down across and up the entity. Personnel need to receive clear communication regarding their roles and responsibility. Very good. And the entire ERM process should be monitored. If you don't monitor, then who is going to take action on the exceptions reported? And it is a dynamic activity. Very important. Let us see how you have answered. Yes. So my basic question was, if I do a transaction in cash or I do a transaction in check, whose inherent risk is higher? So most of you have answered relating to cash is higher. So that was one. Second was If controls are good, management attitude is positive, then inherent risk is. So most of you have said low, low. Very good. Someone has created a relationship, but the answer is correct. Mohammed is the subject management? No, Mohammed, this is enterprise information system, and all these are part of information system assessments. Okay, good. So that is how it looks like. Then controls. Let me see the time. We are 7:16. So I think it's appropriate because we are going to start a very important, very good topic. So let us have a break. So we want to have our break for 10 minutes now. 7:16, 7:26 will rejoin. It's a break. Okay, so back after the break. So we are ready. We are starting. So we have got some very good queries. Let me answer those. uh, Uday has said, sir, bank transaction is risky because it may be general categories. Okay, so that is taken. Then Pranav says that inherent risk has to be same. Oh, Pranav. Uh, okay, so those of you who have read SA 315 and SA 330, there's a very detailed discussion on what parameters are control environment, how it affects the inherent risk. So all are there. Okay. So let us take the next very important topic, and that is why I took a break so that we can dedicatedly focus ourselves on this topic of controls. Now, we'll do a huge discussion. See this, what is the relevance of this topic? So let us talk in terms of the relevance of it. First of all, we have talked about this day before yesterday to today also, that you put controls in place to mitigate the vulnerability, mitigate the risk. That is one aspect. Control as a topic itself, it has relevance in this subject. Sorry, it has relevance in this subject. It is relevant for audit. And this topic is one of the topics that is going to be with you in CA Inter, CA Final. And once you become chartered accountants, maybe part of service or business or maybe practice also. Everywhere, wherever you are going to go, controls are going to play a key role. So this is academically very important from the practice side, from the service side, from the business side, very important topic. So put your mind, heart into this, and lot of questions are also put on controls per se. So just keep a tag of this topic also. Let us continue. So control is defined as policies, procedures, practices, organization structure that are designed to provide reasonable assurance that objectives are achieved and undesired events are prevented, detected, or corrected. Now, what has happened? Three words in terms of controls have come. This para is very important. Let us discuss this para and then we'll go to the module. Control is defined as policy. I'll be asking lot of questions on this one para. Keep your tabs on. Okay. So controls is defined as policy, procedure, practice, and organization structure. Now, if policy, procedure, practice, organization structures are keyword, you have to tell me who in management is responsible for defining control. मैनेजमेंट में या पूरे एंटिटी में अगर आप इमेजिन करें तो कंट्रोल को परिभाषित करने की जिम्मेदारी किसकी होती है? लेट मी रीड. कंट्रोल इज डिफाइंड एज पॉलिसी, प्रोसीजर, प्रैक्टिस, ऑर्गेनाइजेशन स्ट्रक्चर. My question to you is, who in entity is responsible for defining this? So you have to imagine. I'm not giving you options. Okay. Then what they do? They provide reasonable assurance about the business objectives are achieved. So if the question is why controls are put in place, the one word answer could be to ensure business objectives are achieved and preventing undesired events. Undesired events are prevented, detected, and corrected. So controls are going to have three parameters: prevention, detection, and correction. More question on this. So suppose I ask you, it's learning and it is part of syllabus. Okay, the question that I'm putting to you. If fire is a risk, then what is preventive control against fire? If fire is a risk, what is preventive control against? Preventive. Right. Let me read. I've got the answers of the first question. Yes. So many of you have said it correctly. Management, top level management, higher authorities, management. The word that I wanted has come from Karthik. BOD, those charged with governance. So because he has used the correct word, so I want to share the chocolate with Karthik. Then top management, key management person, uh, Piyush Chaurasia says key KMP. Top management is correct. Management is responsible. BOD, top management. Alok, Mauli both says BOD. That is good. So the chocolate has to be shared. Okay. Now that was the purpose I wanted these words to come to discussion, because you read SA 260. What is the name of SA 260? SA 260 is communicating with those charged with governance. Okay. If you read the standard, it talks about policies. Okay. Then SA 265, communicating deficiencies of internal control with those charged with governance. So SA 260 to 65, the core is covered here. Okay. What is control, policy, procedure, practice, organization structure? Who is going to define? Top management, board of directors, those charged with governance. So if there is a gap, to whom auditor is going to communicate? Those charged with governance. Okay. Now coming to the second question. If the risk, it's a very important para. We'll put a lot of time on this because you understand this para well, you understand the topic well. So the next question was, if controls are put in place, what is the purpose for which they are put in place? To prevent, detect, correct errors. So what I asked you, if fire is a risk, what is preventive control? बचाव का तरीका क्या है? Let us read that. And you have all done the mistake I wanted you to do. So let me read the mistake. Okay. So I not need the read the name, but most of you have done it. Insurance, insurance, water to sprinkle, fire extinguisher, insurance. Then fire extinguisher, keep fire extinguishers. I think this answer will require at least 2 e-chocolates. I'll read the answer in the last. Okay. Then fire extinguisher. Pranav say fire alarm. Fire engine. Okay, fire extinguisher. Okay, then prevention, fire extinguisher, alarm. Priyanka. Okay, so at least 3 people in the answer need to get 2 e-chocolates, each of these 3. So let me read their answers. Fantastic. That tells me the level of understanding you all have. So I'm reading these 3 answers. First is Jash. Giving training to person who can be at risk, that gets 2 e-chocolates. So claps for Jash. Training. Fantastic. Next. The second e-chocolate goes to Lalit Priya. Preventive control measures and other safety measures. So she gets it for safety measures. I'll give examples. Okay. Then the third e-chocolate has to go to Priyanka. Keeping an eye over the use of fire in the premise, how you're using it. That itself. Now, please understand why this discussion is very important. The idea has to be created. So if fire is a risk, I'm asking the question back to you. Will having a fire extinguisher prevent fire from occurring? The answer is no. That means fire extinguisher is not preventive. It is a control, but not preventive. Okay. So then what we are looking at, that if fire is a risk, what is preventive control? So let me read from what you have said. Proper safety measures, training, these are preventive, and fireproof material, the third answer, that is preventive. Fireproof cabinet, fireproof wall, that is preventive. Training is preventive. That is preventive. So when you say control against fire, it's only an example to create a distinction between the 3 words: prevent, detect, and correct. So first was preventive against fire. What was that? Fireproof material, fireproof cabinet, training, safety measures, keeping an eye who is using fire. Very good. Then detective. So few of you have answered as preventive, but they are detective. Fire alarm, fire detection, smoke detection is detective. And corrective, most of our answers are in corrective parameter, fire extinguisher. So preventive control prevent occurrence of the loss. Correct detective controls detect the risk, detect the source of risk, and corrective controls are put in place when the risk has occurred. So the purpose of corrective control is to minimize loss. So if fire is a risk, preventive, detective, and corrective, three categories. So this para is very, very important. Who defines control and the control and the nature of control? All are covered in these three. Let us go to the module to read more. Yes, Prabhat is learning from. Oh, okay. Let me ask this question. I thought I will avoid this question, but let us do it. So suppose I say CA result. Okay. So CA result is preventive, detective, or corrective. But because Prabhat is sit, so I'm asking this. CA result is preventive, detective, corrective. You only say P, D, or C, and I'll bring the module. Then we'll discuss your answer. So I'll read the answer. Then we'll go to the module. Jash is saying, sir, that is not control, it's a consequence. Phenomenal, Jash. Fantastic. Okay. Mohammed says, knowledge, discipline, awake. Great. Okay. So, corrective for my own self that I improve next attempt. Detective for my elders, my parents, they get a feedback of what I have been doing since last 6 months, whether everything was going correct or not. And preventive in terms of that I get motivation from someone else's performance. So that helps me improve my performance in the coming attempt. So that was what Prabhat says, that you learn from others' mistakes. So if you see others' performance and act positively, that becomes preventive. Okay. So thanks for participating in this lighter win question. And now coming to this control aspect. So we talked about controls. So a lot of examples are given in modules. So I'm reading that. Okay. When an employee working in specific department wants to purchase something required for carrying out the job, he will submit a PO to manager for approval, purchase requisition. Based on the approved purchase requisition, a PO will be raised. PO may be raised manually or into the computer. So that is the way you do it. The example that we took, purchase invoice, purchase order, comparative quotation, purchase acquisition, stores indent, like that. Then the PO is then sent to vendor. So purchase order generated is sent to vendor, who will deliver the goods as specified in the purchase order. When the goods are received at the warehouse, the receiving staff checks with the delivery note and the PO that what items were ordered and what has been received. This checking is done at the stores and acknowledges the receipt. So what he generates is what you call as a GRN, goods received notes. So this sample control flowchart is given in the module. It's a very good flowchart. And I'll prefer that all of you have the remembrance of the documents which are discussed here. That is very, very good, because this you are going to use till the time you become chartered accountants and after that also. The only difference will be the process will be more automated. Few items are still semi-automated. Very rare is manual, but then by the time you become chartered accountants, most of this will be fully automated. That is, so just have a tag of how these controls are there. So that is purchase cycle. Okay. Then so it's in the module itself. That is one example we wanted to share from the module, the purchase cycle. Okay. Example, purchase, sale. Then there are other examples I'll request you to read from the module itself. Okay. Then type of control in the module, because you have the module now, I want you to refer to the module itself. There are few controls which are called as manual, which are manually done, few which are semi-automatic, and few which are automated controls. So you can just have in the module also the marking is there of manual controls, semi-automated and automated controls. Just keep a tag of them. I'm just reading it now. So manual verification of goods is a manual control. Whether quantity is proper, you count, so that becomes manual control. Then automated controls are comparing the purchase order to GRN, MRN before making payment. So those steps become automated, and then semi-automated controls. So please refer the module, the flowchart we talked about. Then, so this discussion was controls in basic. Now, importance of technology related controls, what we call as IT controls. So IT controls is defined as statement of the desired result or purpose to be achieved by implementing control procedures within a particular IT activity. So technology activity, you put controls in place. Implementing right type of controls is responsibility of management. Controls provide a clear policy, good practice for directing and monitoring performance of IT to achieve enterprise objectives. IT controls perform dual role. They enable enterprise to achieve objectives and they help mitigating this. So now we are narrowing down the whole discussion to technology related controls, but wherever control is there, the purpose, intent, objective is not changed. The only thing that changes is the operational area. Please understand, from the broad control definition, we have narrowed to IT related controls. But if we have narrowed, that does not change the intent, content, purpose of the controls. Okay, what it is only changing? The operational area where it is being put in place, where it is being discussed. First. Second, today, let me put this question back to you. I'm giving examples of some enterprises. What you have to say, what will happen if the computer is not working to this enterprise? Okay. So you have to, I'll give you options of answering. First, let me read the name of the enterprise. Say State Bank of India, Indian Railways, Air India, 3 examples. Okay. Now the question. What happens if there's, or Bombay Stock Exchange, National Stock Exchange, 2 more. So 5 examples. So State Bank of India, Air India, National Stock Exchange, Bombay Stock Exchange, Indian Railways, 5 entities. Now question to you. What will happen if their servers stop working? क्या होगा अगर इनका सर्वर बंद हो जाएगा तो? Okay. Try to answer the question. I'm not giving options of answering. Okay. Then once you answer, we'll discuss more on this idea that when I say IT controls means my operational area is changing. My intent, content, purpose of having control is not changing. What objective is achieved? Read the objectives. They enable enterprise achieve its objective. When we started the chapter of control, what was the definition? You put in place controls so that enterprise can achieve its objective. Now, when I'm reading IT control, what I'm reading, it is there to help enterprise achieve its objective. So has the intent changed? No. The only thing is the geographical area of working has changed. Rest everything remains same. And it helps mitigating risk. We have talked about this, that controls help mitigate the risk. That is how you look at it. Then now putting the controls in place, but I've got your answers, so let me read through them. Great. Alok says that this is also in costing. So I told you ours is a king subject. Ours is a king subject. Income tax, GST, accounting standard, auditing standard, costing, accounting, FM. I think we have referred to all the topics in this these 2 days. By the time you complete the whole module, we have covered every aspect of all these subjects. So ours is a king subject. So believe in subject. Yes. So now here it is. Business is shut down. The operation stops. Money transfer will be blocked. Great. They'll be not be able to generate revenue. Pranay, crores of loss in an hour. Disaster. Wanted to understand the relevance of the question. Of course, that is a backup plan. So that is a separate issue. Alok says people will call toll free number to find reasons, stoppage of work, disturbance like that. Great. Not able to continue operations. Molly says all 5 sectors will get stopped. Great. Now, good. So all of you answered correctly that it is going to affect business continuity, going concern, status of the entity. Now, if server is not working, it is part of IT control. Look to the impact of it. Because what has happened today, business and technology have so tightly merged that when I say controls, it is controls, but control include IT control, and the impact of non IT control could be non business not being a going concern. That impact is huge. Okay. Then going to the next topic, that is applying IT control. So at the cost of repetition, your answers are great. So they allow this discussion to go at a good quality level. Again, coming back to exam, because someone did ask that, sir, what to prepare, what to write in notes. So I've said it again, that you read. I'm giving a PPT. PPT is 100% based on the module. Module has paragraph. PPT probably may have summary of the paragraph. Read the summary, have an understanding, read the module, write in your own words. And one thing that we all need to add is examples. So to me personally, the thing that you need to note is all these examples that we are taking and their relevance to that situation. So one thing that I want all of you to note is example. Rest is whatever you do. You may decide to note, not to note, that is your call. But examples, you take a note of it. They will always help. Okay, now applying IT controls. So 2 categories of controls. Again, my idea is clear. We want a good discussion. We are not going to hurry any discussion. Okay. So it is important for an organization to identify controls, the way the policies, procedures, as per the controls as per their policy procedures, its structure, and configure it within IT software as used in the organization. Now, another important question. I'm giving you 3 words. Okay. Write them in ascending order. मैं आपको 3 शब्द दे रहा हूं. आपको chronologically, not ascending, chronologically arrange the one which is going to come first. Okay. So the first word is policy. The second word is management structure. The third word is IT software. Policy, management structure, IT software. The 3 words I have taken from the first 3 lines that you are looking at the slide. I want you to arrange these 3 words in chronological order of their execution, which will be created first. Whether structure will be created, organizational structure or policy or IT software. Have I said it correctly? I want you to arrange this in chronological order, which is born first, which is eldest of the 3. Okay. Well, your answers, then we'll discuss more. There are different options for implementing controls as per risk management strategy. For example, the way banking is done in nationalized bank is traditional way. The whole graph implementation has to be based on this organizational structure of working. let us not take example of banking sector. Let us say it has to be based on the organizational structure. Two types of controls, general controls and application controls. Before we go there, you have given answers. Let me read. It's a very important discussion. Okay. Yes. So, okay, I got the point. There is some inherent confusion in the word management structure. So whether you want to say top management, middle management or lower management. So I got the idea. So it's basically at the level of middle management. So the right answer to the question is policy, management and IT software. So which is born first? The policy, then the management structure and then the IT software. So it flows from policy downwards. So policy comes first, then management structure, then the software. So software is the last. So if there is something that is incorrect in the software, you have to see how the structure was there and how the policy was framed. Very, very, very important. Then general controls and application controls. So general controls are macro in nature, all across the organization, and the impact pervades the IT environment at different levels. So broad, organizational. Application controls are controls which are specific to the application software. So just for the clarity, I'm putting this question back to you. Security guard. You have to say GC or AC. Okay. So what you will answer, security guard is general control or application control. So you will say GC or AC. Security guard first. So first you have to say security guard is general control or application control. Second, the tally accounting password. So accounting software password is general control or application control. Answer these two questions and based on that, we'll discuss it further. Let us continue to the next slide. Then general controls. It's a huge list of the location that you are going to implement general controls. So information security policy, administration access authentication, separation of key IT function, management of system acquisition implementation, change management. You remember the words. So these are please understand each of this word is at least, means few of the words are 4-hour discussion, few bullet points, but all are at least 1-hour discussion. So if I make a summation of the number of hours you need to discuss these points, it will be more 1, 2, 3, 4. That is more than 40 hours to discuss these points. Okay. So that is the intensity of them. Please understand. Okay. But remember that information security policy, administration, access authentication, separation of key IT function, management of system acquisition implementation, change management, backup recovery, business continuity, proper development and implementation of application software, confidentiality, integrity, availability of software and data files, incidents response management, value-added areas of service level agreement, monitoring of applications and supporting servers, user training and quantification of operation person. So these are areas where you can implement. Application controls are which are implemented in an application to prevent, detect, correct errors. These controls are inbuilt in the application software to ensure accurate and reliable processing. These are designed to ensure completeness, accuracy, authorization, validity of data capture and transaction processing. Examples in the next slide of application controls. Now, please, so tally. Okay, so let us complete this, then we'll go to your answers. First the slide, then the answers. Data edits. Data edits means you can change a field. I'm asking you another question. Let us learn. See, more we learn, better it becomes. The understanding improves. Edit means to be able to change. Editing of data allowed only on permissible field. Now I'm giving an example. Just process the same in your mind and answer the correct one. I am a payroll software and we have payroll master data, which has data about the employee. So what I am a payroll software and we have a payroll master data about the employees. In that payroll master data, there are four field, employee name, employee date of birth, employee present salary, and employee present address. I am a payroll software. I have got a payroll application, payroll master data, in which four fields are there: employee name, employee date of birth, employee address, and employee present salary. I want you to tell of the four fields, which field will never be editable field. Means of the four field, the field that is created once can never be modified. Answer that, you'll get a learning about the first line, data edits. Read that. Editing of data is allowed only in permissible field. So I'm asking a reverse question. Which of the four is a non-permissible field in which you will never allow data edit? That becomes application code. That is. Then separation of business function. Very, very, very important. Please write a word here, what you call as segregation of duty. I want you to note a word, segregation of duties. Maker cannot be checker. Internal control core. Maker cannot be checker. In business also, separation of business function. The person who initiates the transaction must not authorize the transaction. So initiator, authorizer, creator, approver. They have to be different persons. Then balancing of processing totals. Now, because most businesses use accounting software, so this difference doesn't occur. But if you delete some opening balance, then difference will come. So all debits and credits have to tally. Those of you who had the pleasure of going for bank audit, or in future when you go for bank audit, in bank audit there is a report called as long form audit report, LFAR. It is part of your CS syllabus also. Bank audit, those who are reading first, those who are reading it is the word there. In report format, bank audits have to submit to reserve auditing format है, Reserve Bank India को देना है. In that long form audit report, there is a specific question on fourth point, balancing of process. So question in that LFR is whether general ledger and subsidiary ledger totals are tallied or not. So there is a question in that also. So balancing can be good. Then transaction log, very, very important. Please, somewhere in your notebook, write a word called as audit trail. कहीं अपने नोटबुक में एक शब्द लिख लें ऑडिट ट्रेल. कहीं भी किसी भी टॉपिक में ऑडिट ट्रेल के बारे में सुने, पढ़े, लिखे, नोट कर लें. Just keep a tag of this word audit trail. Very, very, very important, because that MCA notification probably you might not be aware about, where it mandated that all accounting software need to maintain an audit trail in a non-editable format. That notification is not applicable as of now, but because that notification is there, audit trail has become very important word. I am reading it again. Transaction log, it's basically the list of all the transactions. That is linked to audit trail. With unique idea logged. Day before yesterday, somebody had a query on audit trail. We took an example. That is creating log of all transaction. Error report and exception report. So error means a transaction is incorrect. Exception is beyond a defined rule. That. Then now, because you have given a lot of answers, let us read them. Good. So security guard and tally, everyone has said correctly. Let me see if anyone who has not said correctly. Good. Now coming to the next one. Yeah, Mohammed, edit includes addition, substitution. These are all edits. Edits means what exactly is edit? Edit is basically you make changes to an existing data field. That is edit. So it can be anywhere. Anything is edit. Okay. Yeah. So, so let me see who gets the each chocolate. Oh, so there are two people who are winners of the e-chocolate for this question because they've given the correct answer. First is Molly and Om. So date of birth. See, of the four, only date of birth is a field that will be ideally non-editable. You cannot change it. Name is also modifiable, but date of birth is not. You got the concept. That is exactly how you are implementing controls in system. Okay. Then indicators of effective controls. Now, what is the topic heading? Topic heading is that we controls are desired. So if controls are there, then how you come to a conclusion they are working properly, they are effective, achieving the purpose for which they are put in place. Let us read. Very, very good. The ability of an enterprise to execute, plan a new work such as IT infrastructure upgrades. So it's a good indicator that the control, what, please understand what it means. We need to get into this line. Suppose my controls are not working good. So if I'm an entity and my controls are not working good, you know what I'll be busy into? Managing things, making correction, improving, rectifying because controls are poor. But if my controls are good, my faith in working is good, my organization is going properly, this will allow me to expand. This will allow me to go ahead. That is the impact of this. So if you see entities going for expansion, building new things, going for enhancing their business, that means the controls are working good. Then required to support new products and services. Yes, so that we have talked about. Development projects that are delivered in time within budget. So if you're developing, the results are timely, controls are good. Ability to allocate resources predictably. Now, this last word is very important, predictably. Predictably means you know that this is there, this may happen, you allocate resources. We talked about that. Enterprise risk management. Because we knew that this is a risk, this is the cost of the control, we already put that control in place. So that is predictability. Doing as required, doing as desired, that is predictable. Consistent availability and reliability of information and IT service. That is again easy. That if the users of information, users of system get their information timely, correctly, controls are good. Clear communication to management of key indicators of effective controls. That is also good. People communicate. आपके यहाँ काम अच्छा होता है. Must do. Always communicate good things. So when people give feedback for good things, that means controls are good. The ability to protect against new vulnerabilities and threats and to recover from any disruption of IT service quickly and efficiently. New vulnerabilities means the weaknesses may come again. Exposures and technology is evolving. New virus, new vulnerability. New technology, new vulnerability. Okay. Let me ask, just creating an idea that how the risk is there. Given an option, you have to say which is the most secured. Okay. Password or biometric. Thumb impression or password. Which of the two is more secure? Say, then we'll read. Based on your answer, we are going to discuss. So, new vulnerabilities, new threats, better controls. The efficient use of computer support center, help desk. Okay, that is it. Heightened awareness about security, training. I told you that special e-chocolate for two people, three people getting two e-chocolate. One of them was this only. Training, awareness comes because the training is good. So that is means controls are working properly. Then framework for internal controls as A. Okay. I refer to these standards, they have come to us. Today, I think we'll have time to talk about that very important topic, flow chart. Things are okay. I want to discuss that. SA 315 defines the system of internal control as the process designed, implemented, and maintained by those charged with governance, management, and other personnel to provide reasonable assurance of about the achievement of entities' objective regarding reliability of financial reporting, effectiveness and efficiency of operations, safeguarding of assets, compliance with applicable laws and regulations. Please understand this is SA 315. We can discuss this in detail. It is going to take hours to discuss this whole para in detail. The only thing that we need to understand is that the whole topic that we are talking about, internal control, has so much relevance in auditing also. Let me read it again. It defines system of internal control as the process designed, implemented, and maintained by those charged with governance. Now you got why I asked that question. Who is responsible? Who has the responsibility of implementing controls? So BOD and those charged with governance, managements and other personnel to provide reasonable assurance about entities' objectives regarding reliability of reporting, effectiveness, efficiency of operation, safeguarding of assets, and compliance with laws and regulations. So SA 315 within itself covers SA 250, compliance with other laws and regulations. It takes care of SA 260, 265. So a lot of standard on auditing is built into this one para itself. Okay. The point is that the whole discussion we take has a color from this also. Then, what internal control system do? They facilitate the effectiveness and efficiency of operation. They help ensure reliability of internal external financial reporting, assist compliance with applicable laws and regulation, help safeguarding the assets of the entity. That is how they are going to work about. Okay, this we want to discuss in detail. There are paras to each of them. There are questions. Let me review those questions. Yeah. So you have all answered correctly that. Okay, Pritika also replied date of birth. So this e-chocolate will go to Pritika also. Sorry. So 3 chocolates for you. No, Dhanish. Dhanish says, Dhanish, if I have an employee database, suppose I am employee, Katul Gupta is an employee. My date of birth is defined. Now, when I say edit means edit to an existing data. Okay. When I get a new employee, the data is new. Okay, Dhanish. Okay. But good to answer. So most of you have said biometric. Good. Now, so what was the header? Header was that new vulnerability. Biometrics, a good control. But it creates a separate category of risk. You have seen in a lot of movies, thumb impression being copied. So believe me, those things that are being shown has itself a risk. So new technology may create new category of risk. So that requires control. Okay, but all of you have said correctly. Okay, so Mohammed. So because it's already has been discussed with you, so my idea was there. Great. So thank you. Thanks for the update. Now, internal control components. 5 components: control environment, risk assessment, control activity, information communication, and monitoring of control. Let us take one by one. Again, I'll be asking questions. Okay, so it's a slightly big paragraph, but important and will lead to questions. Questions for examination. So so let us ask first question. The question in examination comes, write the components of internal control. So your para 1 will be what? So you have to only answer para 1. components of internal control. Para 1 will be what? And let me continue. So I'm reading the first component, control environment. Control environment is set of standard processes and procedures that provide the basis for carrying out internal control across the organization. The BOD and the senior management established tone at the top regarding the importance of internal control, including the expected standards of conduct. Management reinforces expectation at the various levels of the organization. The control environment comprises the integrity and ethical values of the organization, the parameters enabling the board of directors to carry out its governance responsibility, the organizational structure and assignment of authority and responsibility, the process of attracting and developing, retaining competent individuals, and the rigor around performance measures, incentives and rewards to drive accountability for performance. The resulting control environment has a pervasive means all prevailing impact on overall system of internal control. Now the question is, it's a very detailed paragraph, lot of components built into it. If control environment is positive, which risk is affected, inherent or control risk? If control environment is positive, which risk is affected, inherent or control risk? Let us go to point number 2. Risk assessment. Every entity faces a variety of risks from internal, external resources, defining the possibility that an event may occur, adversely affect the entity achievement of objective. Risk assessment involves a dynamic and iterative is repetitive process for identifying and assessing risk to achievement of objective. Risk to achievement of these objectives from across the entity are considered relative to risk tolerance. So this we have talked about. Right now we are reading in the heading internal control component. Why you have to iteratively assess? Because new vulnerabilities may be coming. That is. Thus, risk assessment forms the basis for determining how risk will be managed. The precondition to risk assessment is establishment of objective linked at different levels of entities. So risk assessment is also part of internal control component. Control activities. Now the controls you have put in place. Controls are actions established through policy. Please read the actions established through policies. So what comes first, policy or control? Policy. And procedures that help management ensure directive to mitigate risk to achieve all objectives are carried out. Control activities are performed at all levels of entities at various stages within business processes and over the technology environment. It's all encompassing. Everything is there. They may be preventive, detective in nature, and may encompass a range of manual, automated activities such as authorizations, approval, verification, reconciliation, BPs, etc. So we've talked about all this. So third component is internal control component is control activities. Okay. Then communication, information and communication. Information is necessary for entity to carry out internal control responsibility in support of its objective. Management obtains or generates and uses relevant quality information from both internal external sources to support the functioning of other components. Communication is continual, iterative, repetitive process of providing, sharing, obtaining necessary information. Internal communication is how information is disseminated throughout enterprise, flowing up, down, across the entity. It enables personnel to receive a clear message from senior management that control responsibility should be taken seriously. External communication is twofold. It enables inbound communication for relevant external information to external parties in response to requirement and expectation. Communication, proper communication, timely communication, right time, right person, the right format. That is very important. And then monitoring how they are performing. So 5 basic components of internal control. I had asked a question. Let me see how you have responded. Yes. So para 1, definition of internal control, definition. Yeah, I won't see when I said para 1, so I expected this answer. Few of you have not given, but para 1 you have to define internal control. We have already talked about this. Okay. Yeah, you may take it from essay 315. That is, that can be way of looking at it. So in para 1, what we are all going to have definitions. Great. Good. So this question is from Hiral. So few good questions require each of difference between control environment and control activity. Okay. So I'm putting it back to you. Which is bigger? Okay, let me bring the slides. Allow you to read. This is control activity. I'm reading. Control activities are actions established through policies and procedures to ensure management directives to mitigate risk to achieve objectives are carried out. That is control activity. Control environment is standard processes. I think that answer is built in the first 2 lines. But the Hiral's question was good, so she gets an e-chocolate for this. Which is larger? Control environment. That's why I talked about that when control, this is relating to inherent risk and control activities relating to control risk. A core difference has to come. Okay. So inherent risk basically comes from management perception. Control risk comes from control establishment. That is the core difference. But it was a good question to answer. I love that. Yes, control environment is wider. Yeah. Great. So keep the questions coming. Yeah. Now, very, very, very important discussion. Limitations of internal control. Again, this is one of the few questions which have been asked multiple times in exam is one of these questions. Okay. So limitations of internal control. Again, our para 1 will be defining internal control, and then para 2, these answers are going to flow. So what are the limitations? Now, these, okay, I'm asking you this question. These limitations are giving rise to what risk? I'm not giving you options. This limitation gives rise to what risk? Let me read. So first limitation is management wants control to be cost effective. I'm getting back to the question I asked. Password and biometric, which is more secure? Biometric. But implementing biometric is, in terms of implementing password, can be prohibitively costly. That is, so then entity goes with passwords. It's a decision. It's a balancing that entity does with the cost and the benefits. The fact that, yes, second point. So what you need to note, the examples. Okay. Many of you asked what we need to note, sir, the examples. The fact that most internal controls do not tend to be directed at transactions of unusual nature. Please understand, you can control the one thing you know. Okay, let me put it back to you with another example, a very different kind of example. The attack on World Trade Center happened because that day, no one knew that a high-rise building can be blasted by an airplane. When airplane is full, the fuel tank is full. If a building is hit by an airplane that has a full fuel tank, that airplane is a virtual bomb. No one knew that. But today, because everyone knows, all high-rise, all critical buildings have been made as no-fly zones. Let me read point number 2 again. The fact that most internal controls do not tend to be directed at transactions of unusual nature. What was unusual? The attack on World Trade Center. You couldn't control then. Come to the point number 2. You can control those things which you know about. Those things which you do not know about, they just cannot be controlled. It's impossible to control. That is. Then third, possibility of circumvention of internal control through collusion with employee or with outside party. See, controls are framework. Controls are policies. Controls are procedures implemented. If that procedure is compromised because two people have talked and decided to compromise, then control cannot work. The possibility that person responsible for exercising an internal control could abuse the responsibility. For example, a member of management overriding an internal control. Internal control create rules of conduct, how you do business, but the person who is responsible for ensuring that the business is done that way, if she avoids that, that means it's a huge risk. Manipulation by management in respect of transactions or estimates or judgments required in preparation of financial statement. This you have read in your audit. Management fraud and employee fraud, it's already there that it's very tough to detect employee fraud. These are the examples of nature of frauds. So these again become limitation of internal controls. Let us read what you have said. Good. Very good. So all this limitation give rise to what we call as control risk. Okay. Now, I said today we have time to talk about flowcharts. I wanted to do it, but now today we have time to talk. Now see, this diagram that you are looking at is from your module. Okay. Now, there are roughly, means let me say there are, this is row 1, row 2, row 3, row 4 and row 5. So there are 5 rows. The shapes of row 1 are one of the most used in the module. Others are also relevant, but they are not used to that extent. Okay. So row 1 is the most used. So process, decision, document, data, start and start 1, start 2, and then you can use end as the oval also. So these are the most used. This is basically from the module. I want you to remember all this and importantly remember the first 6. That is. So that is first basics for flowchart. Now, what exactly is flowchart? So flowchart is showing flow of data input, process output diagrammatically. That is basically a flowchart. Okay. So flowchart is diagrammatically representing flow of information that includes input, the process, as well as the output. That is flowchart. Sorry. Now, this I want, please take a screenshot of this. I want you to prepare charts for these. What I'll do, it must not appear like, now this you have to do as a homework. Since we don't have class tomorrow, day after we have class, there are 2 or 3 days gap. Tuesday we'll have the next class. So you have 2 days to work on this. So you read from the module, make your flowcharts. Okay. Then when we meet on next week, Tuesday, we'll start our session first with these flowcharts. So what I'll do, I'll show you the flowcharts. You compare your answer with what I have shown. Compare them. Learn. I'll explain. While I show you the flowcharts, I'll explain also. Then we will do the MCQs and then you can continue. Okay. Oh, and what we'll do the MCQ for chap because we have time. So I understand you have taken the screenshot of this, make this flowchart. Today's MCQ will do today itself. This is from this you don't do right now. Leave this one. Please do those 3. We are not going beyond this. These 3 I want you to do. And then we'll take the MCQ for the day. Okay. So I'll bring the MCQs. Okay. So by the time you answer, let me see if you have any query. Give your answers in the chat itself. Yeah. So there's a question by Mohammed. Is each flowchart independent? Yes, Mohammed. So you are going to prepare 3 flowcharts. Okay. 3. Yeah, Dhanish, no, flowcharts is part of the syllabus. So you need to learn. And flowchart is a very scoring subject. So C. So let us go ahead. First is correct C. Yeah. I am going to the next. Next is a phenomenal question. We've discussed with lot and lot of examples. Huh? Let me see how many. Okay. So Omi is asking what is to be done. So leave that, Om. When we meet on Tuesday, I'll show you. Okay. I basically wanted you to make one effort in learning flowchart and making it. So if you can learn from the module, kindly try to do it. And if you're not able to do, then when we meet, I'll surely do with you. Oh, great. So question 2, we have very good. Oh, fantastic. Sharon, I have not got your answer. It's coming empty. You have tried to, yes, you have said A, Sharon. Multiple times you have posted. Oh, I love this. I thought many of you will say incorrect, but I am held guilty of assuming wrong. Most of you have said correctly. That gives me a lot of confidence in your capability. The answer is C, implementation. Fantastic. Third. Yeah, Dhanish. So by the time answer, let me answer your query. See, flowcharts are one of the most important things to know. I don't know whether you know these words, but at the cost of telling you something that you are going to read in final, see, flowcharts basically define the processes, how things flow. So when you make a flowchart, it creates a very good understanding. To me, flowcharts need to be learned by all of you. Very, very important. Just keep your question for Tuesday. I'll answer that. Just keep a tag of your question. It's more relevant to flowchart that moment. So I'll explain that. Yeah, good. So again, most of you have said correctly. Question 3, exception. This question is repeated. Okay. So most of you would say correctly A, great. Okay, you can leave this. I think we have not discussed this. This is part of. So let us do it till question 4 only. This we have not discussed, so I don't want to take it right now. So that is what we'll take it after discussion. Don't worry. I want all of you to learn good. So we'll meet on Tuesday. You have homework to do. Those of you who could do, try to make some effort in making flowchart. See why I want you to do that. Once you do on, even if it is incorrect, do it. Flowchart is processing that in a diagrammatic form. So we'll meet on Tuesday. Thank you. And we have only done till question 4. Huh? I will do question 5 then only. So Any query? 30 seconds for that. Okay. Yeah, Uday, they do come in exam and they're very scoring. Okay, Mohammed. Good. Thank you. So that is for the day. We are closing down. Thank you. Bye.